Welcome back to BLOCKTV. It's time now for Cryptonomics. And despite severe volatility in the crypto markets, today the number of analysts out there who claim to have their finger on the pulse of crypto's future is ever growing. From technical analysts to macro policy geeks, too many are overweighing their abilities to know what the future holds. So BLOCKTV has invited co-founder and CEO of crypto oracle Kerner to speak to us about some of the biggest issues coming to the cryptosphere and why crypto analysis is such a tough game. Lou, thanks so much for joining us.
Nice to be here, Asher.
All right, so to kick things off, I want to ask, it's been such a busy week, so much happening in the world of crypto and bleeding very much into the mainstream markets, of course, talking about Jerome Powell's testimony, Donald Trump's latest tweets on Bitcoin, and of course, Libra hearing coming up just in the next few days. What do you see this impacting the market, and what are your thoughts and hot takes on these big button issues?
Sure. So, it's our belief we're in the very early innings of what's going to be a very long game. Crypto Oracle, we tend to focus, on where we're going to be in 20 years, and we're pretty sure we're going to be, markedly higher than where we are today, and we know how we're going to get there. It's going to go up and down and up and down. But if we're here in 20 years, everything between here and there is noise, and so we try and understand it, but really again focus on where we're going to be in 20 years.
But is that all that we're seeing right now? I mean, is this just noise on the way to an inevitable Bitcoin dominance or crypto dominance of the world? Or are there potential stumbling blocks coming up given the mainstream attention that cryptocurrencies are getting so much at the moment?
Sure. Well, look, there are always stumbling blocks, but we really think this is the next computing platform, similar to the internet 20 plus years ago. A lot of people have made that analogy. And there are certainly lots of things that could get in the way, but things like regulation, which people focus a lot on, we really think that regulators have two choices. They can roll out the red tape, or they can roll out the red carpet, and they roll out the red tape at their own peril, because this is happening, whether the U.S. allows it or not. I say Google and Facebook aren't in China, but they're still massive, massive things. So governments can have some modest amount of control over this, but the idea that you can regulate Bitcoin out of existence, I think, is silly.
I mean, certainly regulating Bitcoin out of existence might be a difficult game, but it's something that I'd like to touch on, because a lot of evangelists, let's say, in the Bitcoin community come out and say this is an unstoppable thing and it cannot be removed, it cannot be halted, there's nothing governments can do but get on board. But I do wonder, should the US, the Trump administration, for example, turn around and decide they want to ban access to Bitcoin in the United States, it certainly wouldn't crush the market in its entirety, but it could take a big dent out of what exists there. Is that a risk that people in the cryptosphere should be concerned of with the US or other powerful administrations around the world?
Yeah, I certainly think it's a near-term risk if the US came out with some kind of draconian policies against cryptocurrency. That would certainly be a near-term dent. But the truth is, the policies in the U.S. are already pretty draconian. A lot of people, I was just in Asia for 10 days a couple weeks ago, and one of the most amazing things about it was all the expats that I met in China and Taipei, who were there, who came from the U.S., who came from the U.K., who came from Australia, because it's happening there in a massive way, and the regulatory environment is just so much more favorable than it is in most other places around the world.
Oh, and that's something I want to touch on as well. So you recently got back from Taipei from the Asia Blockchain Summit. Tell us a little bit about what differences and innovations you're seeing coming out of Asia as opposed to the West when it comes to the cryptosphere.
Sure. I think the biggest kind of insight that I got was how it's happening on a major scale. And it's largely today focused on fintech, DeFi. If you think about the internet 25 years ago, really the very first industry that got impacted in a major way was print. Print was devastated very quickly, and I think that's what we're seeing in crypto today. It's the first industry this is having a big impact on, is the finance industry and fintech. And right now it's largely just focused on crypto and Bitcoin and the different trading platforms. But we're starting to see real innovation in types of products that you're able to offer when you can have kind of programmable securities like we're starting to see now in Asia.
Now, I mean, you've made this allusion a couple of times now, and of course, you're not the only one doing so between Bitcoin and the early internet, saying that this is an inevitability. It takes time for people to accept it as a real thing, but really it is a case of inevitability of the technology speaks so much for itself. But making those allusions, I guess I've got to wonder, are we prone to the risks of, say, the dot-com bubble of the early 2000s taking place in Bitcoin? And I know we've obviously already seen bubbles come and go within Bitcoin and the crypto community generally, but are we at risk of seeing that play out on an even larger scale at the end of the next bull run?
Sure. I mean, you say, are we at risk? To some degree, I really believe I have a word that I use to describe the tendency of the markets to become bubbles and crash and become bubbles again. And I call that capitalism. That's what markets do. Markets get overexcited. There's something called Amare's law, which is the fact that the impact of all great technology is overestimated in the short run and underestimated in the long run. And that's in part why you get bubbles. And bubbles aren't a bad thing. People get a little overexcited. They think something's going to happen tomorrow. That's not really going to happen for a week or a month or maybe even a few years. But what inevitably ends up happening is in 2 years, 5 years, 10 years, it ends up becoming much bigger than anybody thinks it is. And that's why hodling is so important, because the gyrations up and down are so extreme. If you're really looking at, where things are day to day or minute to minute, it's very easy to lose confidence. But if you take a look at the long-term trend where we're going to be 5, 10, 20 years, it's a lot easier to hodl.
Well, hodling obviously is the name of the game for so many in the crypto community, particularly those older school players who were there from the early days and know what it means to hodl. But I guess I've got to wonder, when you have such potentially deflationary pressures coming onto particularly the Bitcoin market, you have that interest to not to continue to hold because there seems to be a mathematical inevitability that your investment will continue to increase in value. Does that take away from some of the legitimacy of Bitcoin as an actual unit of transaction and means of wealth? I mean, are we just setting it up as this wholesale store of value which people will hold on to until the last possible moment? And does that take away from other potential possibility uses?
Sure. Look, I think the only thing that I know for sure is what it ends up being is something different than what anybody thinks it's going to be. Right in 1994, 95, when people were talking about the internet, nobody was talking about Google or Facebook or AWS. These things are innovation, and you can never know what innovation is going to bring. But when we look at Bitcoin, we really do see it as a store of value. And Bitcoin obviously has really significant governance problems. It struggles to evolve. So being a currency, we really think it would have to evolve a lot to really be a viable currency. There's certainly interesting things going on with Lightning and such that could help us get there. But we think even without that the Bitcoin that we see today, with the governance that we see today, this is the world's greatest store of value. And today, Bitcoin's worth a little less than 200 billion. Gold, depending on how you count it, it's a $7 trillion or $8 trillion thing. And if Bitcoin is really better than gold, then ultimately it should have a higher value than gold.
Perhaps so, but I suppose we've had analysts come out giving some pretty assertive statements, saying that by the end of 2021 we're going to be at 100,000, and by the end of 2020 we're going to be at 1 million. A variety of different assessments, but you've compared market prediction to predicting the weather, saying that it's a crazy thing. It's so many different factors at play. Obviously, you don't believe in short-term predicting, but is there any value in looking longer term and making those sort of predictions, or are we all just on the roller coaster?
Sure. Well, I think it's important for yourself and to have context in terms of what this is going to be. I mean, what you said about the weather, I've written about that. We get weather predictions out for 10 days, but you never go to the Weather Channel. They're never talking about what the weather is going to be in a month or 6 months or a year, because it's ridiculous. There are too many exogenous factors. And it's the same thing with crypto. It's the same thing with the stock market. There are just too many exogenous factors. But what you can do is you can look at long-term trends. Like we see in Bitcoin, it's march that we see to the inevitable store of value eclipsing gold, which means that it can be worth hundreds of thousands of dollars. And I think that's interesting context for people to understand. One of the most compelling arguments for Bitcoin is the fact that it's an asymmetric bet. The most you can lose is 100%. But if it does surpass, the value of gold, then you can be up, 30, 40, 50x. And so it's not very often you see an asymmetric bet like that. Even if you think that the odds are only 10 or 20% that Bitcoin is going to get there, it's still a great investment opportunity that, I've been on Wall Street for 25 years. And, this is the greatest asymmetric bet, I've ever seen.
Well, you say that it could potentially reach, in talking the hundreds of thousands, hitting those six figures. Do you have an idea of a time frame when you think it might hit those levels?
Again, that's a great question. I wish I knew. The fact is that nobody knows. But outside of, I think the biggest risk for Bitcoin isn't that the regulators get in the way, or that something happens technically or via governance. I think the biggest risk to Bitcoin getting into the six figures is a better store of value coming along. And that's certainly possible. But, if you look at gold's had a run for a couple thousand years, so we haven't seen a better store of value for a couple thousand years. Is something new going to come that's going to eclipse Bitcoin? I do think that's the biggest risk, but I think it's a pretty low risk.
All right, well, certainly it'll be something for us to watch to see if Bitcoin manages to last a few thousand years, can rival gold. I think it'll be something we all in the crypto sphere would be pretty happy about. All right, I want to thank you so much, Lou Kerner, for breaking down your views on crypto predictions as a whole and what's impacting the market. Lou, thanks so much for joining us, and stay with us at blocktv.com for all the latest in news and information on the crypto sphere. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter.